Events video for the week beginning the 29th of June 2015. Now, before we get to the calendar, of course, we want to talk about the big thing dominating the news at the moment. If you haven't heard, then you must have been under a rock or in a cave for the last week or two or three. The situation dominating the FX markets at the moment, of course, is the situation in Greece. This weekend, we've had massive developments in that situation, and this is going to dominate the news calendar for the next 5 days in the FX markets. What we're going to do before we get to the calendar is just go to our news feed, and we're just going to look at this special report that we've got going on, which is what the state of play is in Greece. We're going to go through these headlines, and the reason for that is because this is going to dominate the entire price action of everything in the markets over the coming week. Now, we have NFP this week from the US on Friday, which is normally probably the biggest thing of the week, but even that is going to be overshadowed by what's going to happen with Greece, what's going to happen with the EU, what's going to happen with the euro. It's all focused on that. Now let's just take a quick look to get you guys up to speed with what's happening in case you don't have access to a news feed and you don't have access to the research that we have. So let's just go through some of these headlines before we get to the calendar. First of all, there's been no agreement between Greece and its creditors over the weekend. The Greek government have called a referendum on July the 5th on the creditors' proposals as talks remain deadlocked. And what that means is that basically the Syriza party in Greece have got a list of demands from their creditors. They're basically saying, if you want us to keep helping you, you've got to do this, which is basically austerity. You've got to, cut spending, maybe increase taxes, whatever. This is what you've got to do. Syriza party don't like it, but they're in a corner. So unless they default, they've basically got to say, you know what, we'll hand it over to the Greek people. They can vote. And basically the question is this: do you want to implement austerity? Do you want to go through all this stuff in order to get the money and stay in the EU? Or do you want to just say, no, thank you, default on our debt and take all the consequences that will come with that? Bearing in mind, tomorrow, June the 30th, is when they have to make their payment. So the next 24 hours or the next 48 hours could be crucial, basically, because if the Greeks default before July the 5th, it kind of makes that referendum a bit of a moot point because the market will plunge into chaos anyway. So in the meantime, that brings us to the next point. Greek banks and the stock market remain closed until the 6th of July, and capital controls have been imposed. Now, if anyone doesn't know what that means, capital controls basically means that the Greeks and the Greek banking system will not allow you to take your money out. They're going to lock it up, so you can't get access to your money. You can only get access to a very, very small amount of money, and no money can leave the country, basically. And the reason they do that is just in case they need to put their hand in your account and take some money in order to shore up their own financial system. It also is designed to stop the run of the banks and all the money being flooded out of the economy, which of course will happen if everyone thinks they're going to default. So basically, capital controls are now in play. No one can get the money out of Greece, and that's going to remain until the 6th. And basically, we'll see what happens at the referendum on the 5th. A payment to the IMF of 1.5 billion is due on Tuesday. The ELA, which means emergency liquidity assistance on the ECB, has been maintained at Friday's level, but the ECB have stated very clearly that that is not enough for what the Greek banks need, considering how much money has been flowing out over the last few days and weeks. And there's going to be a press conference from Juncker, and Merkel is going to speak to the party leaders at 11. And the volatility in the euro currency is its highest since 2008. So all this is going to be dominating the markets. The data points are very, very secondary here now. This big thing that's kicking off is all about what's going on with Greece. Okay, so keep your eye on that. Keep your eye on the deal. The end of the 30th, the 1st of July is the first milestone. And after that, the 6th of July is the next milestone. Up until the 6th of July, anything could happen. And the markets are expected to be extremely volatile, which make it very, very difficult to trade. But ultimately, we expect the euro to remain under pressure unless Greece is offered an olive branch from its creditors. Now, if we go to the calendar, we can see, let's go through it day by day. We can see Monday, we don't have anything on kicking off really. There's nothing really moving the markets, particularly in that current environment. Tuesday, we've got ANZ Business Conference from New Zealand. Not really a market mover, not really looking for that to move anything. We've also got the current account from the UK. Again, not really expecting this to be a big market mover. RBA Governor Stevens is speaking on the Aussie dollar monetary policy later on, which of course could potentially move the Aussie dollar. We expect the Aussie dollar to remain under pressure for the time being. We still think it's going to get down to that 75 level at some point. It's been very resistant to do that, but I do think it will get down there. So depending on what Stevens says, that could give it a little helping hand. Eurogroup meetings are to be held on Tuesday. And of course, we've got Canadian GDP. That's probably the biggest data point of the day, is the Canadian GDP. This is expected to come out better at 0.1 versus the previous minus 0.2. This would be fairly positive on a negative currency. So I'm not really looking for this to be a trading opportunity. And the other thing is, I really do feel that, these data points will be much harder to trade with this Greek situation kicking off. So obviously, if you're going to trade CAD, avoid the euro. And I wouldn't be trading into this risk event because, you know, we want to see what happens with this. If there's a big deviation, probably could lock it, possibly trading dollar CAD, particularly if it's a negative one. If it comes out below zero, we could maybe look at buying dollar CAD as we expect the dollar to remain supported into NFP this week. And then, of course, we've got CB consumer confidence, we expect to come out much higher than previous. Same again, we're expecting dollar to be overall supported. But again, the Fed are watching the Greek situation closely. And if the Eurozone, you know, if things in the Eurozone start to unravel and, you know, go to bedlam, then the Fed actually might end up delaying their hike, you know, until it's kind of resolved. So depending on how bad it gets, this could have a contagion effect. It could have an international global effect, including an effect on the Fed, because they stated in their last statement that they are watching international events and they are keeping their eye on these things. So it is something you need to bear in mind. And the Greek situation, that's why it's such a dominant thing in the news and why we need to keep particular close attention to it, okay? So that's the data for the Tuesday. If we go to Wednesday the 1st, we've got manufacturing PMI from China. China itself is in a bit of trouble at the moment. Its stock market officially entered bear territory. It's down 20%, the Shanghai index, since June the 12th, since the highs it made. It's down 20%, which is, of course, officially a bear market. This data point is expected to take a little bit higher, but I think the Chinese economy's got bigger problems than manufacturing PMI data, so I don't really think much attention will be paid to that. Of course, we've got building approvals from Australia. This is expected to come out much more positive, but again, it's a positive thing on a weak currency, so you don't want to be buying into the risk event. I would want to be waiting for maybe a negative negative figure, basically, coming from this number. So it was expected 1.1. If we get a significant deviation to the downside, then I think Aussie dollar might sell off. Other than that, probably not really tradable. Then we've got HSBC manufacturing PMI from China. Again, same thing, not really looking for that at this moment in time. Later on in the day, we've got manufacturing PMI and Carney speaking from the UK. I anticipate that all this will keep the pound fairly well supported. You can see that the manufacturing PMI is expected to tick a little bit higher to 52.6 on 52. And a Carney's speech is probably expected to remain fairly hawkish tone, basically expect him to remain, you know, in the sense that Bank of England's next move is probably going to be a hike. Nothing's going to change. They'll watch the data in the meantime. The big thing from the UK now is CPI, basically. So all these little data points, I expect it to keep the pound supported. I do expect that. But the ultimate market mover, of course, is, you know, those CPI figures which are going to be coming out over the course of. So that's what we're looking for there. Now, if we go down to the next data point here, we've got ADP non-farm payroll. Again, it's a corporate figure, it's a private figure, expected to tick higher. The most important thing is it remains over that 200,000 threshold, which has been in place for a few months now, that psychological level. As long as it stays over that 200,000 level, again, I think the dollar will be supported, but I also think the things dominating the market at the moment are, of course, the Greek situation. That's going to be the overriding theme. So you want to keep your eye on that first and foremost. ISM manufacturing PMI, again, expected to tick higher. Like I said, we expect the dollar to remain supported going into NFP, but the big moves are going to be dominated by the Greece situation and all the things that are kicking off there. So that's what you want to keep your eye on. That's where the volatility is going to come from. New Zealand dollar is going to be affected by the GDP price index again. Last time it was negative -1.3. It's been negative for quite a few months now. And if we get another negative reading, we could expect New Zealand dollar to remain under pressure as it has been over the last few weeks. Now, if we go to Thursday, July the 2nd, as we go into the new month, we've got trade balance from Australia, we've got construction PMI from the UK, we've got non-farm employment from the US, and we've also got Draghi speaking there. Now, this is basically, traditionally, this would be the biggest day of the week with NFP, but we expect NFP to come out low at 230,000 versus 280. I don't expect this to have too much of an impact on the dollar, but again, the markets are going to be dominated by thoughts of Brexit, particularly as the uncertainty continues. So if NFP comes out massive deviation, yes, of course we'll get a reaction. Yes, the market will be trading in the moment. But all these data points from the lowest to the highest impact ones, including NFP, the best way to trade them, in my opinion, is to trade out of them, only trade out of the risk events, and only trade significant deviations. Okay, you don't want to trade just any old risk event. You don't want to try and trade into risk events with all this volatility going on in the markets. Okay, that's the best way to trade this week. And of course, Friday, it's a bank holiday in the US for the 4th of July, I believe. Yeah, Independence Day. That's why the NFP is on the Thursday. And then, of course, we've got services PMI from the UK and retail sales from Australia. Again, the overall theme of the week is the Grexit. Will it happen? Won't it happen? What will the ECB do? What impact will a Greek default have on the rest of Europe? and most importantly, how will the market trade that uncertainty? Think safe haven flows. When there's uncertainty, the Japanese yen strengthens. We saw euro yen open the week. Well, it was 500 pips lower from the highs of Friday. Just off the back of that one thing kicking off on over the weekend. So if it gets worse, if the situation deteriorates, if the Greeks default on their debt on the 30th, things could get much worse. The sell-off could, really kick in and get going. On the other hand, if there's glimmers of light at the end of the tunnel, if the creditors hand Greece a deal, if they allow them more breathing room until after the referendum on the 6th of July, we could see a nice big rally on the euro, a relief rally, as the market feels that maybe a deal can be done and maybe there will be no Grexit and everything will be hunky-dory and rosy in the garden. So it's very, very volatile. It could go either way and it will probably dominate the market over the next week. So that's the biggest thing I want to talk about. We've been through the calendar. The data points probably not going to have that much of an impact. They will have an impact in the moment, but if you want to trade them, the best way to do that is only trade significant deviations in the moment the data points are released, while keeping, of course, one big eye on the whole situation.